Everything was up this week in the land of stocks, with small caps up a stunning 12.5% from last Friday's lows, all while big tech underperformed. Perhaps the underperformance of big tech is a result of surging bonds, and if bond yields continue to run, that likely means more pain for the Nasdaq. But the bigger news behind the curtain is that the federal government is working very hard to destroy itself with epic giveaways of money it pretends to have. The COVID-19 stimulus bill will only accelerate the loss of credibility for the government. A $1,400 check won't solve the problems for someone that is a year behind on mortgage payments or rent, and it won't solve the problems of their creditors and landlords. Someday, hopefully soon, taxpayers will realize they're being asked, or rather forced, to bail out bankrupt states, irresponsible cities, and the clown pension funds that spend money on wild financial adventures. And yet, the party's not over, since Biden will follow up the stimulus bill with a $2 trillion infrastructure package as part of the American Recovery Plan. I don't know about you, but I'm saving these stymie checks to simply pay my taxes. So yes, everything is awesome. So, let's take a look at the charts. Today we're going to look at two charts, beginning here with the 20-year monthly chart on the Fidelity Nasdaq Composite Index, ETF, and the symbol is ONEQ, and this is a pretty good proxy for the Nasdaq. And as you can see here, we're elevated well above that 20 EMA all the way up here, and even the price chart kind of looks like a topping process here. Well, I think you'd be right. Moving down here into volume, not going to tell us anything. Into the MAC. Perhaps this elevation up here says stock market gravity is going to take hold. The acceleration continues with a wide separation between the fast and the slow line, so anything can happen. But I would say perhaps some sideways trading and definitely some downward trading in the last few weeks or so. And you can see that here in the histogram. It looks like a pretty large topping process to me. So be cautious, be careful. Into the price rate of change. This too looks like a potential topping process. It's not real convincing, but still has the marks of perhaps the beginning. Into the RSI, we still have this downward trend line. We barely went up through that with this latest move from late last year into this year, but it's still, again, not real convincing. And I think it also shows perhaps some weakness is beginning to take hold. That is also what the stochastics show, at least to me. And the Williams has come down. Here we have a little fish hook. Maybe it heads back up in a small reflection. But pay special attention to these oscillators, because I think the Nasdaq is definitely showing some weakness. And that isn't necessarily the problem. The bond yields have been increasing and putting pressure on the Nasdaq stocks, and I think that can take some air out of this bubble, and that would be good. I just don't want to pop. So let's go take a look at the Russell 2000 and see what that looks like. And now the 20-year monthly chart on the iShares Russell 2000 ETF. The symbol is IWM, and this too is a pretty good proxy for the Russell 2000. Now you can see from this bottom here, it's rocketed all the way up here, more than doubled in about a year. That is tremendous. Now, as you come down here to some of the other oscillators, volume's not going to tell you much, but the MAC does. Look at that separation between the fast and the slow lines. It's huge, which means a lot can happen. But in all of those possibilities is the potential for stock market gravity to pull this down just as fast as it went up. Now, into the histogram, you can see here too, we do not have a top yet. It looks like things are still moving on up, and they certainly did this week. But pay special attention to this as well. Into the price rate of change, pretty much the same thing. It shows that there is a lot of strength, And as you can see here in the RSI, we're at 84.07, and we've hit this level maybe a few times in the past, but not very often. And each of those times we had a decent pullback. So be prepared for that. I'm not saying a crash. I'm saying the potential is a pullback. And right now, with those bond yields heading higher, it's causing trouble for the small cap stocks as well as the big techs into the stochastics, and that looks like it's still moving on up. I don't see any real signs of a topping process yet, but again, pay special attention. Into the Williams, we can see that's all the way up here to a negative 0.43. That's a rare reading so high. Moving back up here into the price chart, one last look, and that looks fantastic, especially if you were able to ride that roller coaster. But the roller coaster may be nearing a peak and could plunge. So all I want you to do is be patient and be cautious. It's always a possibility for a crash or at least a pullback. I don't quite see it yet, but it may be in the cards later on. We got a lot of stimulus coming through, and that's going to hold the markets up for a while. But sooner or later, that musical chair is going to get pulled away. So for today, that's ChewDog Charts. Thank you.